Well, iron ore prices have dropped to the lowest level in nearly 2 years, amid predictions the party is over for Australia's iron ore miners. Oversupply and the slowing Chinese economy are the main drivers, with lower demand from Chinese steel mills. Still, Chinese companies are pressing ahead with plans to take over Australian iron ore explorers to shore up future supplies. Here's resources reporter Sue Lannon.
Iron ore is Australia's biggest export earner, but there are worries about the impact on the bottom line. Now prices have tumbled below $100 a tonne. That's the lowest since September 2012.
People are very concerned that maybe the demand coming out of China is slowing. We see some of the manufacturing indices are coming in a bit lower. There's some stockpiling happening.
Iron ore exports to China hit a record high earlier this year, putting stockpiles at Chinese ports at record levels, in turn sending prices lower. Australia's big iron ore producers all have new supply online, so prices are predicted to drop below $90 a tonne over the next couple of years.
There's plenty of supply. There's companies that are already producing are increasing their production or the ability to produce more. There's new mines coming on stream around the world.
That could hit smaller Australian iron ore miners and inefficient Chinese producers. But Chinese steel mills are still trying to shore up supplies, with recent takeover bids for Australian iron ore explorers. Steelmaker Bao Steel and local freight operator Horizon have made a more than $1 billion hostile takeover bid for small WA miner Aquila Resources.
It was valued at $1.4 billion, and certainly the actual capital expenditure on the project is close to $7.5 billion, so it's quite a substantial transaction. It's surprised some people with regards to the timing of it, in the sense that there's quite negative sentiment at the moment regarding iron ore.
The plan is to restart the stalled Anketel Port and Rail project in the West Pilbara in WA's north. Bao Steel already owns 20% of Aquila Resources. Aquila's boss, Tony Polly, owns nearly 1/3 of the company, but appears to be holding out for a higher price.
I think that Aquila will probably hold out for a higher bid from Bao Steel. Also, the fact that Bao Steel is a little bit frustrated on the development timeline suggests that they want to actively push this project forward.
It's also been a long-held ambition of Horizon, the former QR national, to build a West Australian iron ore business.
It can provide far more a facilitator role of getting approvals through the Australian market, and actually it's got the financial firepower and skill set in building rail to actually add value to Bao Steel's approach.
More players could be interested. If the Anketel port development is built, it means that Fortescue Metals could develop its Western Hub iron ore deposits. Another possible user is Kerry Stokes Iron Ore Holdings, which is pressing ahead with its own plans to build a mine, port and rail development in the region.
It should unlock a new sort of iron ore country.
But if iron ore prices keep falling, the viability of new projects could be under threat.
The issue is that the cost of digging up the iron ore, the infrastructure costs, which will be, on our estimate, somewhere between $32 and $45 a tonne, the transport costs, the royalty costs, by the time it gets to China, the cost of this may be somewhere in the order of $80 or $90 a tonne.
Getting Australia's stranded iron ore deposits out of the ground is the challenge. A lot is riding on the price.